For the 2021 Investment Strategy Annual, in the Future of Warehouses section, we develop a framework to analyze whether supply will outstrip demand in 3 types of warehouse markets and compare investment strategies for these markets. As we know, the warehouse sector is a top performer in nearly every country we follow. Looking forward, the warehouse sector is expected to continue to lead performance among major property sectors in the next 3 to 5 years. And we expect the weight of institutional capital targeting warehouse properties to continue to grow in 2021 and beyond. However, in the next few years, investors will have to grapple with a more complex picture. While the demand drivers are expected to remain strong, supply pipelines are rising in a large number of markets, and warehouse returns are expected to trend lower as pricing for leased warehouse properties continue to rise and ongoing yields continue to decline. Because of these trends, many investors are willing to take on additional risks to boost returns through value-added or development strategies. Nonetheless, depending on the level of supply constraints, some markets are more suitable for build-to-core, or others are more suitable for develop and sell strategies. Let me share more details. In major markets with low supply, such as London, Los Angeles, and Tokyo, core warehouse assets are richly priced and going-in yields continue to compress. Value-added strategies such as speculative leasing, renovating old warehouses to modern specifications where possible, or converting underperforming property types such as retail to warehouse can boost returns in these low-supply markets, since they usually have large demand bases to draw upon, but often lack of modern warehouse stock and with very limited land availability. For investors who can take on development risk, the build-to-core strategy is often attractive in peripheral locations of these low-supply markets. In regional hubs with moderate barriers to supply, such as Madrid, Shanghai, and Toronto, the supply-demand dynamics in these regional hubs are usually versatile and highly reactive as soon as landlords reduce rents or offer less rental increases during renewal reviews. So the risk of oversupply is usually low over the long term for these markets. For investors with a long-term or flexible investment horizon, they can consider build-to-core strategies in these markets to boost returns, or cautiously search for fairly priced core warehouse assets in strong locations. For investors with a finite or short-term investment horizon, pricing for leased warehouses will need to be adjusted to reflect the near-term supply-demand imbalance in some of these regional hubs. In markets with high supply, for example, Phoenix in the US, Xi'an in China, and Warsaw in Poland, they are often categorized by strong consumer spending growth, rapid expansion of e-commerce, easy access to low-cost labor force, improving national and regional road infrastructure, and most importantly, affordable rents compared to those of low-supply markets. Robust supply pipelines work in these high-growth markets if and only if demand remains strong. The development strategy requires a view that demand will remain strong enough for the asset to lease up relatively quickly after the completion. This often depends on delivering warehouse assets that appeal to key needs of tenants in these markets, since there will be competition from other development projects.